Okay, guys. So we're looking at the oil price today, which is a really good opportunity to get to get into the market and buy crude oil because oil is moving higher based on the expectations for higher growth in global trade. An economic rebound in the United States will help the global economy recover, and that is helping the outlook for oil to improve. We also saw last year when the pandemic first gripped the global economy, we saw oil sell off nastily, and that was because oil consumption fell dramatically and you had a price war between Saudi Arabia and Russia, and they increased the supply whilst the demand for oil was decreasing, and that caused prices to drop dramatically. Since then, OPEC and Russia have come back together. They've cut production dramatically. Millions of barrels have been reduced in terms of supply by the OPEC members, and of course, now oil demand is increasing as the vaccines are rolled out, and then the economic situation becomes more positive, and then oil is used again in large consumption to how it was before the pandemic gripped the global economy. So you got to look at it in terms of, remember, oil is a big component in the world. It's used in manufacturing, it's used to make plastics, it's used for aviation, for cars, for driving, for heating, it's used for all sorts of stuff. So it's still one of the biggest commodities in the world, that's in terms of consumption. And this is why oil is now heading back towards where it was trading in 2020 before the pandemic first hit the global economy. So we still have a move of around 20% to get back to where it was trading at before the pandemic gripped the global economy. So we still have some room to move. And you're seeing oil, if you go to Bloomberg, go across and you can have a read. And it's accelerating on Joe Biden's fiscal stimulus package coming into the US economy. And remember, if Joe Biden is pumping all this money into the US, those dollars are going to find their way into the rest of the world, because remember, the US has a negative current account balance, which means they're importing more than they're exporting. So dollars are always finding their way abroad, and that helps the global economy to grow because of the US being a net importer more than a net exporter. And that obviously is positive for global growth. So if you can clearly see here for the United States, we can see that when we do an analysis of the trade in the United States, they're importing 2.4 trillion, then they're exporting 1.4 trillion. So they're exporting an extra $1 trillion to the rest of the world, and that helps global growth pick up when the US is going through strong growth. You can also see the correlation between the S&P 500 stock market index and the oil price. And why is this? Why do they move so closely? And you can literally see when you get dips in the S&P 500, you get dips in the oil price. As soon as the S&P 500 picks up, the oil price picks up. They literally move hand in hand with each other. Even when you get pullbacks here in the S&P 500, you get pullbacks in the oil price. Now, the reason for this is because obviously the US stock market is an outlook for the US economy. If the stock market is pushing higher, then the US economy is expected to grow, and therefore the rest of the world is expected to grow. And then oil is obviously going to be following the expectations of the US economy, because the oil consumption around the world will be dictated by whether the US is growing, because again, as I said, that helps the rest of the world grow. Then if we look at this chart here, where we have a look at the data for manufacturing PMI and the oil price. Remember, manufacturing PMI is predicting GDP growth in the United States with a high certainty. And when you get a reading above 50, this indicates growth in the US, and a reading below 50 indicates contraction in the US. And we have the oil price on the right-hand side. So ISM is in blue and the oil price is in orange. Now look how closely correlated the two are. They literally move hand in hand, because when the manufacturing is going below the level of 50 and contracting, we're getting negative growth expectations in the US. The oil price slumps dramatically, because if the US is contracting in growth, so is the rest of the world. Oil consumption declines. As soon as the manufacturing troughs and starts to rise again, indicating growth is going to be returning in the US, and it gets back above the level of 50, which is the separation from contraction and expansion, then the oil price really starts to pick up and rally higher in the market. So you can clearly see there's a strong correlation. Obviously, after the pandemic hit, ISM went below 50. You can clearly see as it started to decrease, the oil price followed, and now oil and the ISM has got back above the level of 50 and growing, and the oil price is now following. So clearly, we've got a positive outlook for growth in the US, and the oil price is moving higher. And this is why it's a good time now to get into oil. As long as the vaccines can get distributed across the US and the outlook for US growth is positive, and they can also be rolled out across the rest of the world, then we have a situation where oil is likely to continue to rise. So volatility on oil is around a 20% stop loss, but you can have it between 10 to 20%. That's the range you want to give the market enough breathing room to fluctuate by. And you can have an upside target of around $70 per barrel. So let's see if this plays out. This is a really good trade opportunity in the markets. And hopefully we can take this and make some money if this plays out correctly. So that's oil and the outlook for buying this commodity.